It just happened. SpaceX, the biggest IPO in history, is now trading below its IPO price. Here's how a $2 trillion rocket ride came back down to Earth. Just over a month ago, SpaceX pulled off the largest initial public offering ever. The rockets to AI giant raised roughly $85.7 billion, closed its first trading day worth around $2.1 trillion, and made Elon Musk the world's first trillionaire. The stock rocketed to an all-time high of $225.64, briefly pushing SpaceX's valuation past Microsoft and Amazon. Then came Wednesday. Shares dropped 1.7% to $134. Under the $135 IPO price for the very first time. Everyone who bought in at the IPO now sitting on paper losses. So what went wrong? 3 things. 1. The whole market is wobbling. Uncertainty over the Federal Reserve's rate path and doubts about how long the AI-powered rally can last are dragging down the big indexes. 2. The critics are feeling vindicated. SpaceX is still unprofitable, and many of its boldest bets remain untested, a valuation built more on narrative than near-term fundamentals. 3. Momentum cuts both ways. Even joining the prestigious NASDAQ 100 couldn't reignite the buying. The stock is down nearly 13% since it was added. Now, to be fair, stocks dipping below their IPO price is not unusual, especially when the broader market is under stress. And some analysts warned before the IPO that better entry points would come once the first wave of hype faded. Looks like they called it. So what's next? All eyes turn to SpaceX's first earnings report as a public company, and in true SpaceX fashion, it's doing things differently. No date announced yet, and results will drop only on its website and its X account, not through the usual wire services. The takeaway? Wall Street enthusiasm can cool fast, even for the biggest, boldest company on the planet. Chasing momentum is a dangerous game, and hype is not a fundamental. If this saved you from FOMO buying the top, share it with a friend who's still holding.